Would your investment skills have been good enough to not only avoid being dragged back 2 or 3 years after Black Monday 1987, would you actually have made a profit? The majority would panic, sell, or just sit in a miserable drawdown for 2 years. If you think about it, it's kind of pretty relevant to 2026. You've got every other guru I know on YouTube, on social media, talking about the AI bubble. On COILBOX, we know that history rhymes, it doesn't repeat itself, and the underlying pattern, the underlying DNA remains the same. And we're like forensic financial detectives on the crime scene of a crash or a big move to the upside. COILBOX is like the CSI training ground. Enough waffle. Let's get into Black Monday. It all started actually on July 21st, 1987. That's where the COIL began. If you've got the COILBOX app open, go there. If you haven't got the COILBOX app, just click the link in the bio. It's completely free to go into the Hall of Fame section, which is what we're going to look at now. Also, it's a good idea to have TradingView open on another tab. TradingView, if you don't get any extra features, is completely free. All of this is on the sensible daily time frame. So there's no intraday activity. Our investing mindset is not day trading. As Warren Buffett said, it's pretty easy to get well-to-do slowly, but most people don't want that. So in COILBOX, we're kind of on Warren's side on this. Okay, so here we are on TradingView, and we're going to hop over onto COILBOX app. So this is what you see when you join COILBOX. You see these three bits. The part on the left is about get started. Pretty self-explanatory if you go in there. Gives you the background, give you an understanding, some education in there. It's a free PDF. Feel free to go into there. Right, let's go into, we click on here, Hall of Fame with the camera next to it. Just click that. That takes you through to the COILBOX Hall of Fame. Hopefully you like the UI. I spent ages trying to make this look kind of friendly for people who get involved in investing. But I appreciate your feedback. Anything we can do to improve it. We're an early startup business, so anything we can do to do that, really appreciate it. Right, so let's scroll down. We've got it into various different sections, but let's scroll down to big events and Dow Jones, Black Monday, October 1987. So here we are. This is the trade idea. All of these little boxes are called trade ideas. In there is a database full of information which breaks down the DNA of the big moves, whether to the upside or to the downside. In this particular case, it was to the downside. So you got kind of four headline items: helicopter view, call score, pivot score, and long or short. We are going to start with call line start. No shit, Sherlock. Right, so they added to Hall of Fame. That's just for, if you're a user, you can get to see when we've added, which is at the moment every day we're adding new members of the library, and it's a chance for you to see what we've added, when we've added it. And here we are at call line start. So the call line starts on July 21st, 1987. You've got the high and the low. You can see for yourself there. And these coils are within an area. Sometimes it's very, very tight, and we just use one price target. But in this particular case, there's a bit of a spread. And then you can click on this paperclip icon, and you'll see that throughout here, and you'll see, then it'll take you through to a screenshot of that particular section of COILBOX. So here, this is the start. And if you go to TradingView, and you can see the same thing. So that's when it started. And it looks fairly innocuous at the start, and they quite often do. It's only as it plays out that you kind of get confirmation that that is the right level that the market is reacting to. And that's what it is. Now, bearish moves are more complex, for sure, than bullish moves. So moves to the downside are often quite more complex. But here we are, we've got a clear level, and we'll see what happens next. So that is the start. It's as simple as that, and the start will 90% of the time look very, very innocuous. It's only as it plays out, it's like a story you're reading, that you start to see the relevance of that level. So let's go into coil phase. Coil phase is broken out into two sections. You've got the overall scoring and another screenshot. And then further down, you've got coil phase, deep dive, and that really is just how many touches we've taken and the reaction to the level, which is critical as we go through it. So key criteria we achieved with this, and we'll have a look at it on TradingView in a moment, is more than 2 touches. It was over 7 days old, 50% reaction. We had very, very good shakeout liquidity. You'll see that in a moment. And we'll talk about rising volume as well. So that's what you get. If you click the paperclip, you'll see on the screen now, you can see the coil as it breaks out. By the way, the coil is on called VCP, cup and handle, various different things like that. Coil just makes more sense to me, and it kind of wraps up quite nicely what we're doing at COILBOX. So let's have a look at TradingView for this particular thing. So you can see, as I share this from left to right, that price touches down again at the level at the 22nd of September. So we had this touch, second touch, and this was quite significant. So you can imagine the market has made a big move to the downside. So price is broken below the daily 10 and 20-day moving average, black and orange. And you can see it's made a lower low, makes a lower high, and then makes another low. But this level, price respects it and then bounces back off it. And now you can see that this level we've set at 2472 really is making sense. So what happens else? What else happens in the coil? Well, what you can see here, as it bounces up, this level here, which has only been touched twice, as it comes back up at about 2635, it wipes out that people's stop losses. So people who are going short, which there would have been a whole bunch of people going short, having seen this lower low and this lower high, then they would have gone short. But price comes up, doesn't respect that, and takes out this liquidity. And that is, you can tell there's institutional involvement here, because they're not weak holders, as they call it. They don't have stop losses. They have a price target. At this point, they were committed to price going to the downside. They were getting out of there. You know, their positions where they've made a ton of money, because all the indexes at that point in 1987 had made an absolute fortune, and they were holding on to their money and taking their profits. So at this point, these two double dojis on the 2nd and 5th of October really were a good sign that the market was fully committed to the downside as it took out this liquidity. It would have caught a few people out who decided to go long, and it would have taken out this stop losses. So this would be buy-side liquidity. So people would have had short orders, this would have triggered a buy, and then this would have allowed big institutions to find liquidity to buy, short the market even more, get some more short orders. So again, let's see what else we've got in the coil. We got a third touch. And then if I go to the right, you can see in COILBOX we measure the reaction. The first reaction was nearly 11%. Yeah, you can see on screen here. And then this final reaction, as price comes down, touches, and then only goes back 3.4%, and then it breaks to the downside. So in the COILBOX app, we're making notes here where we can see that this aggressive behavior to cut short this move to the upside and make this massive push to the downside. Right, let's talk about the pivot. So the next part of the COILBOX process is looking for a pivot. The pivot was made famous by Jesse Livermore, and you'll hear Mark Minervini talk about it, and people like Christian Kulamagi as well. If you haven't heard those names before, you're going to hear them a lot more. You know, those are some of the icons of trading amongst many who use this system. It's not my system, it's not COILBOX. We're just standing on the shoulders, really, of incredible traders and investors. So this is the pivot here, and it isn't particularly strong. The market is panicking at this point. So this is, just checking the date, 13th of October, where we get the final attempt to push the market to the upside. So this is buyers who have vainly think from this level they can buy the market up, and they fail miserably and they lose. They lose that particular position. So if you look at it in the COILBOX app, if we go to pivot, you can see there's three criteria: doji, squeeze into the EMAs, and volume capitulation. What is really common on the best pivots is the volume in this pivot area completely dies off. Now, I think we've got definitely rising volume, which is one of the criteria for the coil. I don't think this particular, and I'm talking about this area here, it's not a great pivot. But I think because of this market action, this big push, the weak reaction here, and then this very, very, this rising volume here would make you very interested in taking this position. I would have taken this position for sure. So if we put a breakout took place 14th of October 1987. So with the COILBOX system, you would have got in ahead of the complete panic, and that's what all traders are using this system. The advantage they have is that they are seeing this play out before the mass market sort of starts to get involved. So you got the breakout here, and if we add the sell order to it, you can see how it plays out. So volume keeps increasing. This area here is where the market, this is what people talk about on Black Monday, where they later introduced a circuit breaker, where these automated systems, which are quite rudimentary at the start, were panicking, and they were just selling orders and sending the market into free fall. And I'm guessing that people started to pull the plugs out the back of computers to try and fix it, but the system just collapsed at this point. But the Fed dived in with liquidity, buying these positions to try and hold the market up, realizing that this was just an extraordinary set of circumstances. This isn't normal market behavior. So the rules in COILBOX are that we will either close the position or take a big chunk off the position once the price closes above this orange line, this 20 EMA. Very simple rule. There's nothing to do until price closes above that 20 EMA. Control your emotions, just follow the rules. It's easier said than done, but that's kind of what we need to do. So it was a 7R position, and it closed on the 9th of December. So we go to the COILBOX app. You can see in the breakout phase, it gives you that detail, which then allows you to go into the helicopter view. And in the helicopter view, you can see so we give it a ranking. So I think it's 4-star. I think the pivot is quite weak on this, but the coil, the reaction, and the volume on the breakout was huge. So I'm sure that I would have taken this position. We give a simple maths calculation. It was 7R. So if you had a $10,000 account, you had 1% risk, you would have made $700. Simple as that. The position duration was 56 days, so 2 months, and that's kind of a 7-day week, 30-day month. And coil duration was 85 days, so it was bouncing around in that coil for 85 days before it broke out below that level. Yes, it was a win. And then I like this particular image here, which shows in context where this took place and why it took place. And you can see this is a weekly time frame for the DJR, so the US 30 or Dow Jones, and you can see here is where this happened, this panic, and you can see that the market was incredibly overextended, so it was always going to correct at some point, but the correction was just beyond anyone's scale. But people who bought in here, which again would have been institutions, and you can see it took out this liquidity and then made this push to the upside. So you got the real context of where this took place and why this was such an amazing short position. Could you have traded it? I think with COILBOX, yes. There's never any guarantees in these things, and you've got to take in place when you look back in time. You've got no emotions; it's all cold. But the more you do this, and that's the point of COILBOX Hall of Fame, the more you're going to be successful at it, because you just train your mind to just recognise, overriding your emotions to recognise when that was a great setup. So that is Black Monday. So if you haven't got it already and you found this to be useful, appreciate any comments you've got. Join COILBOX, go into the link in YouTube or in my social media, and then you can join for free. Within 24 hours, you'll get access to all of this and the system and all that kind of good stuff. I'm trying to make this, the free part of it, have a huge amount of value because I think there's so much junk out there about trading, investing. I wanted to make sure that this element of it, using VCPs and coils, really got some focus and people weren't put off by the price of things. So see you in the next one.